Thanks for listening to our series today on collective investment trusts. I'm Jessica Ballin, one of the advisors on the team at 401k Plan Professionals, along with Gina Buckles, Jenna Witherby, Kristen Carlin, and Kelly Panic. Education has always been the backbone of our organization, so we've added a number of webinars and videos on our YouTube channel and on our website because we feel educating our plan sponsor clients and their employees is extremely important. And we are really excited to partner today with Val Ferrara. She's a senior retirement sales rep for Wilmington Trust. She has been in the retirement plan space for almost 2 decades. She's been an extremely valuable resource to our team and helped us grow and learn and educate our plan sponsor clients on collective investment trusts and the value of having these type of investments in their lineup. And with that, I'm going to turn it over to Val so she can kind of help provide more detail on CITs.
Thank you so much, Jess. In regards to CITs, CITs have reached more than $3 trillion in defined contribution plans, which is almost a third of all DC assets. I love speaking to the fact that CITs were actually invented before the mutual fund. CITs started in 1927. In the 30s and 40s, they were predominantly in DB plans and pension plans. Fast forward to the advent of the 401k plan in the 70s, you really had CIT in the form of stable value, which a lot of plan sponsors I'm sure are familiar with. In 2000, CITs started trading on the NSCC just like mutual funds did. So they walked and talked just like a mutual fund. In 2006, we had the Pension Protection Act passed with implemented QDIAs, Qualified Default Investment Alternatives. And with QDIAs, we had asset managers come out and say to themselves, well, maybe we should create CITs for our target date funds. And that's what we saw, however, with very high minimums. If you fast forward to 2012, you had 48B2 pass and you had fee compression. So then you had asset managers say to themselves, maybe we should come out with CITs for other asset classes. Fast forward to today, you could get a CIT in fixed income and equity and international, still of course target date funds and stable value. 2 years ago, Wilmington Trust partnered with the NASDAQ to create the very first ticker for a CIT. We wanted to help answer the questions that plan sponsors and participants had, that they want to be able to Google something. Now they could Google a ticker and see price and performance. I'll move along to now the differences between CITs and mutual funds. I love to harp on the fact that CITs are still regulated just by somebody different. CITs are regulated by the OCC or the state, where mutual funds are regulated by the SEC. Fees. A lot of people say that CITs are cheaper than mutual funds. I like to phrase it as fee flexibility. CITs, you're able to change that investment management fee under the CIT and offer relationship pricing depending on what advisors use the CIT. Offering documents, we're all familiar with the prospectus as it relates to mutual funds that really just discloses information. For a CIT, we have a participation agreement and a fact sheet. Both those pieces have the same types of disclosures that a prospectus would have. Trustee or board of directors. CITs are run by a trustee and CITs are held to ERISA standards. Mutual funds are governed by a board of directors. And then availability and accessibility. CITs are only for qualified retirement plans. There is a participation agreement involved. The plan sponsor essentially is promising that they are a qualified plan. We would review that to make sure they're qualified before allowing them into the CIT. Whereas a mutual fund, anyone can access a mutual fund.
Yeah, I mean, this is such great information. And as our partnership with our Retirement Registered Investment Advisor, GRP, we have access to, with Wilmington Trust, some of the least expensive share classes or least expensive CITs out there in the industry. And one other thing to note is we've been adding CITs to a number of our plans at really a variety of different plan sizes. And I think as a fiduciary and on a plan committee, it's just extremely important to make sure you're aware of these options and we're having these conversations in our committee meetings and noting them in the minutes, so.
Thank you. So now I want to just touch on some myths that are still out there. So one of the myths would be that CITs are not transparent and that they lack reporting. So we actually report all of our CIT data to Morningstar. We pay Morningstar to generate our fact sheets. The fact sheets look and feel exactly like a mutual fund fact sheet would, and they're generated quarterly. The participant experience is the same as they log into their record keeping website. They're able to click on a fact sheet and look at a CIT fact sheet. In addition, we did that partnership with the NASDAQ where you're able to Google a ticker and see price and performance. Another myth is that performance is the same for a CIT and mutual fund. So in some asset classes, that may not be the case, and specifically fixed income. But at the end of the day, when you're looking at what's the CIT and the mutual fund is, you're looking at the investment policy statement and the portfolio managers, which are the same. Another myth would be that CITs are only for mega plans. And that was the case in the 80s, 90s, and up to recently, that really only $1 billion plus plan sizes were able to access CITs. Wilmington Trust has been able to bring CITs down market, and for most our CITs have no minimums to access them and really available to any plan size. There are two pieces that we have if you would like additional information. One of the pieces on the right here does that side by side that I spoke to before, mutual funds or CITs. On the back of that piece, it has that timeline showing CITs started in 1927. The other piece is a white paper going over the growth of CITs, which speaks to the fact that now CITs represent a third of all 401k plan assets.
Yeah, thanks, Val. And one more thing I feel is that a lot of the headwinds that were kind of up against CITs in the past with, transparency and being able to download performance, and also just a larger plan size market, those are all kind of coming to the wayside. So we're just really excited to be able to offer these type of products with our partnership with Wilmington Trust and GRP to all of our plan clients. And if you want to check out some of our other webinars in our education library, they're out there on our website at 401kplanprofessionals.com. We also have a YouTube channel as well. And if you have any questions at all on anything to do with CITs or this video, you can reach out to myself or Val. We're both happy to answer any questions.